Hi there, welcome. This is Cambridge House Live. My name is Jonathan Ruff. I'm joined now by David Morgan. He's from the Morgan Report, and you can see him online at silver-investor.com. David, thanks so much for joining us.
My pleasure, Jonathan.
So I want to take a look at what's going on in the global economy. People think we're cratering with what happened last week and that it's only going to get worse. Give me a macro look at what's going on.
Well, I think the big thing to emphasize is that what happened in the financial crisis of 2008 has not been resolved. If it had been resolved, then the discussion we're going to have wouldn't be taking place. Unfortunately, the too big to fail attitude has only made the situation worse. And because of that, the potential is out there that we could see another problem similar to the 2008 crisis. I'm not forecasting that we will, but there's nothing, again, that's been resolved to prevent that from happening again.
Okay, so I want to get to the United States eventually, but let's start with what's happening in Europe, because that seems to be what's everybody's talking about, right? Everybody is, really nervous about what's going on there, and the dominoes, could start falling, really quickly now. What's going to happen? Is Greece leaving, or are they staying in? They're going to figure something out. What's going to happen?
Well, no one knows for certain. To me, I would guess that Greece is going to leave or be forced out. Same thing might happen with Spain, could happen with Italy. We don't know for certain. But basically, to have that union of all those countries with such different capital structures, spending rates, and promises to their populace, to combine them together and think it'll work is ludicrous. Obviously, we're finding it out now. How it's all going to unravel, we really don't know. Printing your way out of it is not going to work, so I'm not real bullish on the overall situation, although I think it probably could be stalled further than others in my group. In other words, others in my peer group might say it's imminent. I'm going to hold my water, so to speak, and wait and see. Could happen this year, but it could be prolonged longer than most of us would like to see it prolonged.
Right, and in terms of prolonging it, I would think that is just going to make the pain even worse when it finally hits.
Right, you can't live a lie forever, so once the truth comes out and you can't print your way out of this, then something's got to give. And what will give, who knows? One scenario would be going into the drachma, for example, and then they'll get back to a different parity with the euro, and of course the net worth of the individual Greek citizen will go down, not up. And there'll be lots of prices to pay in all levels. Basically, governments, sovereign debt as we refer to it, are out of money. And the only way you can get yourself to resolve that is to grow your way out of it. Well, the way you grow your way out of it is the populace of the country. If the populace is broke because their governments have promised too much, it cannot be done. It's physically and mathematically impossible.
Right, okay. Let's move over to Asia now. China, we've seen a bit of a slowdown going on there. India as well. What do you see happening there long term?
Well, the two big capital markets that have made this system continue has been India and primarily China. Yeah. And it's been taking the debt, or buying the debt of the United States primarily, taking those paper assets, if you will, and converting them into hard assets. Right. China's been looking at the commodity sector for quite some time, been a huge buyer of copper and other metals, and they've really had a growth engine. Unfortunately, they've caught the Keynesian disease as long with everyone else, and they've overbuilt. Huge misallocation of the capital in the real estate market, for example. They've got, I think, 62 million apartments that are empty right now. That's twice the population of Canada. That's every citizen in Canada having 2 apartments, but they're unoccupied. So that's one problem. There's several along those lines. Regardless, Chinese look at things differently than anybody in North America. They don't look at things as next quarter's earnings or 2 years out or even a 5-year plan. They look a couple of generations out. From their perspective, it may be obviously overbuilt temporarily, but longer term maybe not. I'm still bullish on China overall, but I think there are going to be, obviously there's going to be a slowdown here. Whether they overcome it or not, I think they probably have a better ability to overcome it than, say, Europe does, because of their long-term view and their asset base. They know what to invest in, and that's hard assets, and they'll continue to do so.
Now, some people think that China has a lot more debt than we know about, debt that's off the books. What's your take on that?
I don't care what the amount, well, I care about debt, I talk about it all the time.
Sure.
What I want to emphasize is that debt schmet for China, because they've taken that debt, used it as a quote-unquote asset, and bought real assets. Right. So if you've got a piece of paper and you don't think it's going to have purchasing power in the future, or less purchasing power in the future, what do? You buy something you need. Sure. And that's what I talked about in 2000 at the bottom. I said we're going macro picture-wise from things that we want to things that we need. It's the commodity super cycle. It's beginning now. So I didn't call it to the day, but I called it to the year.
Right.
And that's what China understands, and that's what they continue to do. So they're looking for assets all over the world. They're in probably Africa bigger than any other nation state, and they're not slowing down. Temporarily, yes, perhaps, but longer term view, no. They know they need to build, and they're going to continue to build. Are they building everything correctly? No. There's misallocations, as I said, but again, long term, looking at a couple generations, I think China will become the superpower going out, 10 or 20 years from now.
Right. Now, what about moving over to South America, Brazil, what's happening in Latin America? I mean, this place is exploding in terms of growth numbers and everything else. Do you see that continuing to happen no matter what happens in the rest of the world?
Well, I think Brazil and, the BRIC countries, Brazil, India, China, don't get the credit they deserve. I think that they're going to continue. But again, under this, debt financing that all countries are involved with, it makes it more and more difficult the deeper the debt situation. But I think Brazil is doing well. I think they'll continue to do well. They have a little bit of problem getting, their land mass and shipping and that kind of thing.
Sure.
Are some challenges, but they're well aware of them. I think they're working through them. I'm pretty bullish on South America, not as much as I am on China.
Right.
But I think a lot of these nation states are looking at the overall problem. They understand it. They're not exactly sure how to get out of it, but they're moving away from the dollar. They're trading vis-a-vis each other's currency. For example, Russia to China, Japan to China, and that type of thing, and circumventing the U.S. dollar altogether. That's taking place in the South American countries and will continue as well.
Right, okay. If you're an investor, how nervous are you about the United States?
The United States, I think from a long-term perspective, I'm still bullish on the U.S., but from a mid-term to intermediate-term perspective, quite concerned.
So define that for me then.
All right, well, looking like China. 2 generations out, America could be looking very, very good.
Sure.
But we might lose a whole generation.
Yeah.
So that's what I mean. I'm looking at the next 20 years, not so good in my view. 40 years from now, maybe bright. I don't know.
Right.
What I do know is that we've caused a lot of these problems. We have had the printing press ability to push off on all of the countries our inflation and said you have to accept these in payment. Countries are waking up and they're circumventing the dollar, as I said a moment ago. And because of that fact, you're going to see the United States start to contract more and more and more. We're already witnessing that.
Right.
And have for several years.
So does it matter, Romney or Obama? Are we going to get the same fiscal picture no matter who's in?
Well, I've been asked that before, and I'll give the same answer.
Yeah.
Romney or Obama is like changing the captain on the Titanic. It doesn't matter who's at the helm, the ship's going down. That's how I see it.
Right. Now, is one going to speed it up as opposed to one that might slow down the process?
No, it's like spinning the wheel fast to the right or the left. I don't think it matters much. It could make a slight difference.
Okay. We could talk about U.S. politics, for the rest of the day, but let's get to what's going on here. Junior market, what's going on with these mining companies?
Well, the junior exploration market's really got it tough, and I think they'll have it tough from here on out because a lot of them still need to finance. And even though there's a lot of money sloshing around in the banks, it's really hard to get that money freed up into any viable situation, be it a mining company or a new idea or a startup or whatever.
Right.
So I think they've got it pretty tough, which is an advantage for the mid-tier companies that have cash because they can buy up real assets at a discount. So that's the situation I see most of exploration companies on the junior side. Not that there won't be some good ones, and there are some good ones, but it's that part of the cycle is over where it's easy money in the junior explorers. That was done between 2000 and 2005.
Right.
The paradigm from that time, 2005 or 6, until now, it's mid-tier growth companies that are producing and have positive cash flows and are building their capital base and making money. And those are the companies to be invested in it for the most part right now.
So taking a look at some of these companies over the next, say 2-3 quarters, are we going to say, I'm going to guess that we're going to see quite a few of these companies drop off the map. The ones that are left, I'm going to assume, are ones that you should really take a serious hard look at.
Yeah, it's a 2-tier market the way I see it. One is, as you said, the smaller companies that need to finance maybe will drop off or be bought if they're really good.
Right.
And the ones that are making money will actually do quite well. And the reason being is that most of your bank analysts will look at these companies and they'll do their analysis based on $17 silver and say $1,200 gold.
Sure.
Well, as bad as this market's been, we're still at $1,600 gold and almost $30 silver.
Yeah.
So once the real numbers come in, then the earnings are going to be surprises to the upside. They're not going to surprise me because I know what the values of these companies truly are. That's what I do in the Morgan report. But the analysts on Wall Street will be shocked
Yeah.
Well, what other business model do you look at when an analyst does a study on a stock and says what their price to earnings ratio is?
Right.
They don't assume at Walmart that their earnings are going to be less than what they projected the quarter before and take a 30 or 40% haircut and say, well, that's their earnings. But they do it in the mining industry all the time. It's ridiculous. It really, obviously, is one of my pet peeves.
Right.
I don't think it's fair. I think they should take an average. They take the average.
Why do you think that is? Why does Wall Street do that?
I think that my
behind
take,
that?
I don't know. I mean, I'm not a big conspiracy guy.
Sure.
They're being conservative, and I don't mind that, but for conservative, take the average price over the last year. Take the average price of silver in 2011, you're looking at $35 an ounce, which is higher than it is right now.
Right.
So you'd be underperforming this year based on $30 silver, but
Sure.
nonetheless, it'd be more accurate.
Right.
But you know, I don't like the idea that they'll always be rating what the earnings are in these gold and silver companies basis some fictitious number they pick out of the air when the real earnings are available just by knowing what the prices are, at least an average price.
Right. So what do you think is going to happen with silver over the next, let's say, 3 months?
3 months, I think it's going to work itself up. I think you're looking at probably the bottom. I think we've probably seen the bottom for silver. I'm almost certain we've seen the bottom for the mining shares.
Sure.
And the shares usually lead by about a month, so I'm looking for probably a bottom either now or by late June.
Okay.
And then you'll see silver work up, probably well over 30, probably in the $32 range. I'm looking for 40 by the end of the year, and it could accelerate above 40 quite easily. But I think we have, you know, a lot of overhead resistance. I mean, I do the commodity side as well as the mining side. I know the market from different aspects.
Right.
And the aspect on overhead resistance, either the stock market or the commodities market, puts a damper till you get through those stale longs, as they're called, that want to sell back and break even. Until that's work off the market, you really can't move significantly to the upside. That will happen.
What about gold?
Gold I'm very bullish on as well.
Yeah.
There's not
Are
as
you
much,
one of these guys that's, you know, 8,000, 10,000, this kind of stuff?
You know, I'm more practical. No one knows the top price of gold, at least not yet.
Yeah.
But you know, before we get to 8,000, we got to get to 2,000.
Right.
So let's get there first.
Sure.
My price back in 2000, the year 2000, was $2,500 gold.
Really?
We're not there
Okay.
yet. My
Yeah.
price on silver has been $100 an ounce.
Right.
So if you look at that ratio, I'm saying a 25 to 1 ratio. I think it's going to be better than that for silver. I think silver will outperform gold. It has so far. But you know, let's wait and see. I mean, I'll reevaluate it. One thing about the work I do is I pretty much let the market dictate what our projections are rather than pull some number out of the air.
thin
I
air,
tell you how I get my numbers.
Right.
Most people don't.
Right. Okay. Well, listen, I think that's all we got for you today. But we know the next show we're going to have you back because you're fantastic. So appreciate your time today.
Always my pleasure. Thank you.
Okay.